to the rationalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the rationalinvestor.com's daily brief. This will be our free broadcast on Tuesdays. We have actually TRI CTO on the Afterparty, Sjord. Of course, Sjord, absolutely just a rocket scientist when it comes to picking cryptos. I suppose we can pop on over here. Here we are, Tuesday, Panic Tuesday. No, it doesn't sound right. Anyway, Tuesday. It is Panic Tuesday around TRI, as I said. Sjord, who is the mastermind behind the website, the engine, all of the sort of technology behind TRI. He is on the call for our after party here, so that should be fun if you can tune in for that. And I tell you, some of I even told him this today with a totally straight face. I'm short crude right now, so just wondering what's happening here. I'm probably going to be distracted. I've got a nice runner on here from the opening range trade this morning, and it's working quite nicely in our favor. Actually, these are my ultimate targets down here on this thing. So probably the best thing I should do, just not touch that. So back to what I was saying there a second ago. Sjord's on the call. He is our chief technology officer, and frankly speaking, I think he is one of the best crypto analysts I've met in the space. And look at another one of his names. I mean, look at these silly things. Just keep powering to new highs. Show me a new high, and I'll show you a Krakow, something like that. And now look at this. Now another one of his ones that he likes, this Atom, is coming to life. Oh boy, there we go. And look at that volume surge. Oh my goodness. Volume speaks volumes. You ever see W's and OBV indicators? Oh boy. And actually, what do you think? Is that a half decent bot setup? Holy crap. Boom! Up it goes. Move stop to scratch. Move stop to trailing. Boom! Straight up, almost hit the bot target there, eh? Look at that, eh? So I mean, strong like bull. Leave it to Sjord picking names like a boss here. And I also noticed a couple of the other names that we had sort of mapped out bots, like this guy here. You wouldn't know that Bitcoin's correcting right now. He's actually back in the money after yesterday's precipitous dump. So that's still working away. I do think that the link, he took a little bit of a punch in the nose here, down 39 cents. Be interesting to see whether this one holds in. He's underwater. But what's interesting is we have a huge wiggle room here. So there really isn't anything to get overly excited about here, just in the short term. Anyway, we'll just let those work away. And, as I said there a moment ago, am short crude off a nice day trade. So accounts nice and happy. A green day. The only question is, where do we ultimately take off the final contract? I always do like to try and what do we say here? I like to try and let a runner run, and if we're really lucky, you actually close the position out on the lows of the day. One thing I will say with regard to futures, though, is we are down almost 4% on the day on crude. That's kind of stretching it a bit. So I wouldn't be surprised if there's some give back here. That's a heck of a big move. But what the hell? Half of the problem in this game is they always say you want to cut your losers and let your winners run. So we're letting the winners run, and we'll see how that goes. Anyway. Why is this meltdown sort of happening here? In the crude oil being sort of a leading component in the commodity sector, the energy sector, I guess, of the commodity space actually is usually the leading indicator in the space. And then things like gold and silver, they're lagging indicators. They come up last. But you can see it's a down day right across the board. Interesting, too, how we have gold coming off here. And yet, if we actually look at the price quotes, you can see gold's actually up $1.10 here. So, what's going on here? Like, why would that dump as hard as it is? The scuttlebutt that I'm hearing is that Saudi Arabia is potentially going to flood the market with oil to try and drive the Americans out of business. Thought it was interesting too. I saw an interview, and I think quite a few people saw it with good old Trump and him basically saying the interviewer is like, "Are you going to be a despot? Are you going to be an autocrat if you do get elected? Or are you going to like literally end democracy in the United States?" And he's like, "I'll be an autocrat for one day." I don't know whether you can believe any of that nonsense, but he said, "I'm going to shut the borders," which, frankly speaking, I think makes a lot of sense. And I still don't quite understand why the Democrats have absolutely no interest whatsoever. If they want to get that Ukraine war funding package passed, all they got to do with the Republicans in the U.S. Congress is say, all right, well, let's negotiate on this border and let's figure out some sort of compromise. And then the Republicans have said, then you can get whatever you want in Ukraine. So, and they're playing hardball. I mean, it's politics. So I do find it kind of interesting that the Democrats and Biden, they're not even mentioning immigration when it comes to the funding for Ukraine and stuff. And they're just bitching that the Republicans are being jerks and they don't like democracy and all that. Well, that's not what the Republicans said. Anyway, aside from that, I do find it interesting that there's a lot of sort of forces at work that are driving oil prices down now here. And interestingly enough, we were debating in the day trader room just a little while ago. If I'm not mistaken, Biden basically sold all of the U.S.'s strategic oil reserve off there $100+ a barrel. So maybe it would be a good idea for him to get $60-$70 a barrel to go and buy a big whack of it back. That would make sense. Anyway, I think probably the biggest thing that's going on in the market right now, and it probably explains why the stock market is basically just parked here today. Well, we've got a Fed meeting, and actually, these are usually 2-day events. And I suppose if we just pull up the stock market chart, usually what happens in these kind of things is if you are a bull, you really don't want to see the stock market rallying into a Fed announcement because that's kind of like buy the rumor, then the event happens, sell the news. So, if anything, I'd almost be thinking that the fact that they've got the stock market kind of parked here leads me to believe that they actually would like this market rally to continue following the announcement tomorrow. But if anything, it would make perfect sense that we have a big fat doji here. So I don't think anybody's going to really stick their neck in the noose in earnest ahead of the Fed announcement tomorrow. That would be kind of silly. So, I'm sure there's probably like last minute wranglings. What's the Fed going to do? What's the Fed going to do? The headlines this morning, talking heads, US inflation rate eases to 3.1% in November. That's actually a little bit misleading. A little disappointed that they actually painted that because if you actually look at the data, one thing that jumped out at me when I was looking at these inflation numbers this morning was the core rate. Because keep in mind, that's what the Fed watches. Personal consumption expenditure and the core inflation rate. And actually, you can see the core inflation rate actually ticked up this last reading here, month over month. And it's just stubbornly sitting at this 4% level year over year, not moving an inch. So I'm not exactly sure. I mean, I suppose this is what the talking heads are sort of touting, that small tick down, basically in line with expectations. But the Fed doesn't watch just the headline number. I mean, obviously, yes, they're going to comment on the headline number. What they like to watch really closely are these core rates, and that actually ticked up, not down. So I don't know whether I really buy into this headline. Um, as we had sort of said there, or at least I said there a moment ago, I think what's going on here is, caution. That's probably the perfect way to describe that. And how do you describe sort of caution, indecision in the marketplace? Well, big fat doji, that'll do it for you. And did crude just break lower here? Oh, nice, nice, very nice. I want the market to reject 2.618, so it goes dumping down into 4669s here. Yeah, this could be a really big day here, so that's good to see. Sorry. This is the problem with having open positions and doing these videos, is that I'm horribly distracted. Obviously, that's caught my it's got my attention a bit here today. Anyway, moving on. US dollar, I think on that inflation number, you can see this is a 4-hour chart. Market actually opened up this past 4-hour bar and was dumping hard. And on that inflation data print, you can see the market snap back violently. You might call that one of those Darth Maul kind of candles, big wick, big tail. We could play in both of those levels. But I think that the market, those people that trade the currencies, they're just simply, I'm going to sell US dollars if there's any talk of a rate cut. And if the rates are going to increase, well, you might actually see a bunch of buyers jump in wanting to take advantage of the higher rates. I might call that almost like an indecision candle, an unchanged candle. I do like the idea that this looks like a cup and handle. So if we see that this US dollar index is up through this, and also too the nice railroad tracks high there, but also this little peak here, what is that? 104.26.3, 104.26.2, 104.26.2. So clearly 104.26.3. If you see this thing up through 124, 104.26.4, tomorrow on that Fed announcement event, then I think that this inverted head and shoulders is going to fire, cup and handle is going to fire, and US dollar is probably going to be heading substantially higher. I guess just the way that I would look at it is the gold market here is sort of the anti-US dollar. And if anything, if I was a commodities trader, I think I'd be wanting to hunt bearish bots or bearish trend continuation trades to the downside here. That looks very, very toppy. Big fat M staring us in the face. It might be a trap. I don't know. You can see there's the crude oil absolutely puking out here today. So commodity prices in general look weak, and that would be supportive of a stronger US dollar. So we'll see how that goes. I suppose stock markets, some of our pro traders were contemplating shorting against these highs here this morning, which I wouldn't blame them for. But you can see the Dow is pushing higher. But again, like I said, if you're a stock market bull, you don't want to see these indexes pushing higher here heading into the Fed. And it is interesting to see the Russell 2000. This is a big disconnect between big cap stocks and small cap stocks. Something's not, something's broken here. So it'll be interesting to see. And then again, like we said there a moment ago, S&P 500 kind of like sort of middle of the road. It's not as bad as the Russell 2000, not as strong as the big Dow index and things like the NASDAQ. So it's just sort of fluttering along against its highs of its range here. But again, do we really want to put on a big position here on the stock market ahead of the Fed? I mean, the only reason why I have my fun little crude oil trade working, it was an opening range trade that I try to do every trading day. I missed it yesterday. I gave myself permission to sleep in because I had a horrible sleep last night. But the only reason why I'm in this is because that is the trading plan setup that I'm running right now for that. Anyway, we'll see how that goes. Interesting how it's just bobbing and weaving right at this 2.618. This is actually a really good exercise for everybody in learning how Foggenbaums work. So if we do actually accept this level here and turn back up in earnest. And you can see, look how many times we tag this trend line. If we break through the trend line, you get any kind of bullish structure on the other side of this trend line, I think I'll walk away from the trade. And if we reject off this 2.618, next stop should be 4669, which is interesting because that's basically the 2.618 off of this huge range here. And then, sort of a side conversation. Remember, Brian's slightly distracted here today. We got our old buddy Johnny Hoagland and his weekly kickoff levels. And he painted this 6730 area as a really important level for him. So really, I think I'd be best just to leave this thing alone for the rest of the session here and just let this thing work its way lower. Anyway, shiny object, distracted. Okay, where was I? So we were talking a little bit about some of the commodities, some of the stock market, some sort of rules of thumb here through the Fed. If you are a stock market bull, you really don't want to see this stock market rally in the face of that. Interesting to see how crypto seems to be rolling over here. The algo did actually just flash a sell signal, so it's back on the sell side. I was scratching my head a little bit there yesterday. I guess the day before yesterday, it flipped back bull, but now it's back on the bear side again. And I got to tell you, crypto is looking awfully heavy. It's just we've got Sjord, Mr. Absolute Genius, who seems to be able to pick the fundamental names that are going to revolutionize the world. So his names keep rocking and rolling here. But on balance, I look at a lot of the crypto space and it is looking very heavy. So, even some of his recent darlings are looking heavy. Like this guy could easily come down to earth. In fact, probably that's a big fat bearish divergence on that move up top there. I guess we can get rid of that. Let's see, just out of curiosity. Survey says, wow, look at that. Oh boy. So here's a really good example of, and let's see if you YouTubers can answer this for me. Clearly, we've broken the new lows. So we've put in bearish market structure on this indicator. So if you were a bull on this rune and you see that the bearish momentum divergences have been confirmed, what are you supposed to do if you are a bull? Pretty straightforward. I think probably all of you people that sort of have taken any of my education programs and stuff like that, you all should know this in your sleep. Nicely said, Alex. Very good, TBG. Nice. What, Eddie? You're such a fucking smartass. Look at all you smartass traders. Waiting patiently for the gaps on the Kraken Euro pair. I like Nick. He goes CYJ, so he's trying to keep it simple. Is that you over there, KOS? Is that you, Nick? On because KOS also said CYJ. So I think this is a really, really good example. I mean, you look at these internals; they look like an absolute train wreck here. If you are a bull, great. Maybe these guys are going to reinvent the wheel, and next best thing since sliced bread, blah blah blah. But maybe just cool your jets. I mean, what the hell? We had just an absolutely monstrously huge run. So I don't think anybody's got anything to complain about. But this is the law of physics. You can only stretch the rubber band so far. And I actually like the idea that, maybe we just got to calm down here a bit and let the markets settle down and consolidate a bit. So that's that. And of course, I mean, have you not been hearing me over the past few weeks going, don't chase, don't chase, don't chase. You're going to get your head handed to you. There's a really good example that if you chased up here, oh, this is a new bull market, man. I'm going to get rich. Uh-oh. Oh, Jesus. And now you've got these indications from the indicators. Oh, boy. Maybe just cool your jets. Anyway. So that's sort of your state of crypto right at the moment. I mean, if you're still trading setups and you bought the setups, well, you just got to live with the results. We'll see what happens, whether these lows get blown out. But just understand that, there's no way you could be like a little old lady and come in and buy an asset like this. This is trading actual setups. And if we lose the setup stop level lows, you better obey risk management and get the hell out of there. All right, so I suppose just finish off quick boo at corn. For the longest time here over the past month or two, we've just been like, well, it's one directional, it just keeps heading up. When are we going to start seeing some give back? So we're now finally starting to see some give back. As I said, algos are starting to flash warning signs, and even somewhat bearish signals. Here is our FUMC event, and then also couple this with Joey Diamond and Elizabeth Diamond. I don't know what the hell we'll call her. Sort of playing footsie there in the U.S. Congress, debating about how hard they should shit on the crypto space. And of course, Joey would prefer that they just outlaw crypto because, after all, Bitcoin's a fraud, but JP Morgan, it's never been convicted of fraud, has it? It's never settled lawsuits out of court for huge, ridiculous sums of money and then had like big hush agreements on the settlements so that the people that got fucked over by Joey and his buddies can't say anything publicly. No, that's never happened, has it? Well, anyway, I would say at present, I think we now actually have a little bit of a trading range established. So the panic dump lows that we saw the other day, the counter trend rally peaks, you can see how the market tried to accept back above my fast moving average, which I think works as an excellent sort of bull bear barometer. You can see in these particular cases, notice the market tried to lose it, quickly sprang back above it. I'm a bull. I'm a bull. Fuck you. Right? And then again, it dumped down. No, I'm a bull, damn it. Fuck you. And it got its ass right back above there, stayed above there, stayed above there, broke down. I'm a bull. Oh, maybe I'm not a bull. Right. So you can see how we finish here today, whether we can recapture that moving average. It's a lot of, if you want to note, write it down. And a lot of guys that I used to trade with over the years, they'd always look for 2-bar confirmation on things like moving average crosses. So here's a really, really good analogy of that. We got 1 bar, got out of there. We got 1 bar, got out of there. We didn't even get a close below there, got the hell out of there. We got 1 bar. Now, do we get 2-bar closing confirmation? You can see the market tried to get out of there and got bitch slapped back down. So if we do close 2 days here, then I definitely think this is a trading range. And actually what this should turn into is what I like to call a moving average sandwich. And we might even just bang back and forth between these two moving averages for a while. So that's sort of the market state right now. And it is interesting to see 2.618s. Here's a really great example where the market broke through 2.618, tried to accept higher. Question is, was there divergence on this push to new highs? And, MACD off of this high way over here, huge div. But I even think, just off of this, this was a divergence on that push to new highs there, right? So this was the high from here, and this high here was lower in MACD. It wasn't really that well of a defined div, but nonetheless, it was a div. So, RSI, actually that, an absolutely perfect defined div. And then also too, if any of you follow along my RSI sort of thinking, what are we supposed to think if we see this second M, this first M up top here, that's sort of your signal that if you're a bull, you better just cool your jets and calm down and maybe just sit on the sidelines. And the second M, which came in through here, not really that pretty of an M, that's actually a sell signal. So I think that's what's happening now. If anything, what I would expect to see is a little bit of a counter trend rally, then another M, which would paint the purple, which of course is the public coming in and shorting, and that's a trap. So let's see how this plays out. If we get that third M that comes in, then I think that the down move is probably nearing exhaustion. and we should look for a pivot. We'll see what happens. Only time will tell. As I had said earlier, and I've said a couple times in this broadcast, I don't think I really want to take any huge conclusions out of what we're seeing in the market today. If anything, what we have to do is we have to be patient. The Fed's meeting right now. This all might be a trap, although I'll tell you, it looks pretty damn bearish right across the board in crypto here. But it might be a trap. And what we find is by 1 o'clock tomorrow afternoon, you actually start seeing this market start to firm up a bit. We'll see what happens. So I think I'm probably going to leave the free broadcast at that. As I had said earlier, we had only one major econ that came out today. It did not support the Fed lowering interest rates. As I said, the core rate is actually ticking up. And of course, this year-over-year inflation rate, this is what the Fed always is talking about, that they have to get this thing back down to 2% before their sort of job is over. And you'll notice, it's probably a good learning moment for you guys. This core rate does not move very often. It is slow as molasses. And so to actually get this thing to break back down to 2%, which is half of what it is right now, this might take the next year or two to actually happen. It's not going to happen overnight, folks. And as long as I see like month over month actually ticking up, there's no way in hell the Fed can lower interest rates in the face of that. Now, it is interesting to point out, there's one gentleman, and I've shown you his videos, and Chris even made reference to him again today. This guy is screaming bloody murder. He thinks that the whole damn economy is about to just tip over. So if that does happen into the new year in January, February, and we actually see the market start breaking in earnest, then all right, I can buy into that newsletter. But the problem here is, does this stock market look like it's breaking to new lows? It looks like it's breaking to new highs. So how the hell can you cut in the face of that? I love the talking heads, and they're talking about how the sky's falling. Chris's girlfriend. What's your girlfriend's name? I always forget her name. Danielle, something like that. Come on,
Danielle DiMartino Booth. That's right.
There you go. That was almost like pulling teeth getting that to get out of it. Anyway, she's constantly going on about how the fucking end of the world is coming. So, I mean, the good part about these talking heads, of course, is broken clock is technically right twice a day. But it's awfully tough for me to see the stock market or the Fed even contemplate lowering interest rates with a stock market that looks like that. I just can't see it happening. So anyway, we will be doing the public broadcast through the Fed later on tomorrow. I think tomorrow is the announcement, right? So maybe check in for that. It's a lot of fun picking apart which news reporters want to hook up with Chep Howell. Oh, Chep Howell, you're so sexy. And who are the reporters that don't like him very much? Well, Mr. Chairman, what do you think about all this? So, okay, have yourselves a great day. PMA for the win. Sjord, are you here yet? I don't know whether our panic cook. There he is. Sjord, ready?
Yeah. Yes, it's a bit cold, but I'm ready.
All right, so let's go have some fun in the after party. Maybe Sjord's got a brand new fundamental name for you to chew on. There's a teaser for you to join us on the other side. Have yourselves a great day. All the best. The only thing left Brian to say at this point is bye for now.